Hello, welcome to the European Open Briefing for Tuesday, June the 20th. I'm Rafi Barajan, currency analyst at XM.com, and we're going to be having a look at what's happening in the currency markets today. So it is a fairly quiet day this morning. The main notable mover is the UK pound, which came under heavy pressure following some comments by the Bank of England Governor Mark Carney not a short while ago. The dollar, though, is on an uptrend. It was boosted yesterday by comments by the New York Fed President William Dudley, who pretty much reinforced Janet Yellen's view and overall the Fed's view at the FOMC meeting last week, and that boosted U.S. Treasuries, which in turn drove gold prices to a 5-week low. We also had the RBA meeting minutes released earlier today as well, and they pretty much we saw the RBA maintaining its balanced view on rates, but there was a little immediate reaction to the Aussie. The Aussie, in fact, headed higher soon after as it tried to recoup some of yesterday's losses. But let's start with the dollar. We can see here in the chart the dollar has been steadily climbing since yesterday. It did hit 3.5-week high, 111.77 yen. William Dudley, New York Fed President, who's also a close ally of Janet Yellen, he pretty much reinforced the view that low unemployment over time should help push up wage growth, and that in turn should help inflation head towards the 2% target. But another FOMC member, Chicago Fed President Charles Evans, he was a little bit more dovish. He actually said it would be better to wait until the end of the year before deciding on the next move, due to the fact that inflation, due to the fact that the Fed is actually still missing its inflation goal of 2%. And we can see here that since last week, US Treasury yields in purple here in the chart have been steadily edging upwards, and they were further boosted by Dudley's comments, and that partly explains the weaker gold prices, which hit a 5-week low, $1,242.61 an ounce. We can see here in the chart that US Treasury yields had actually hit a 7-month low on June the 14th. This comes despite the fact that we had 2 rate increases this year. We can see that they peaked in December at the height of the Trump rally, and they've steadily been drifting lower, whereas gold prices have been steadily climbing upwards. Gold still has some underlying support from the ongoing uncertainty about Trump presidency and its impact on the Republicans' tax plans, as well as Brexit and some other geopolitical worries such as North Korea and the Middle East. But the main reason why Treasury yields have been drifting lower is because markets are unconvinced yet that the Fed will need to raise rates one more time this year, and that potentially they would have to raise rates at all next year. So if we do start to see some signs that inflation in the US, not just inflation but also wage growth, is picking up, that could potentially weaken gold prices and boost Treasury yields. Let's have a look at the pound now, because we did have Mark Carney, he's the Bank of England governor, as well as the UK Finance Minister Philip Hammond, speaking at a breakfast event in London in Mansion House. This is actually the same Mansion House speech that was due to be given last week, where we had that tragic fire at Grenfell Tower, which led to the cancellation of the event. This was actually a closely anticipated speech, because it would be the first since the the Brexit talk started today, but yeah, both of them were to speak, or at least mention Brexit. Mark Carney said that given the mixed signals on consumer spending and business investment, and given the still subdued domestic inflationary pressures, in particular the anemic wage growth, now is not the time to begin that adjustment. And by adjustment, he's referring to rate increases. Of course, at the last Bank of England meeting, we had a split of 5 to 3. but this does signal that other MPC members are unlikely to follow suit, and if it comes to the governor having to have the deciding vote, he'll probably, in this suggests that he'll probably vote down a rate increase, and he also warned that UK business might soon have to activate their contingency plans depending on how the Brexit talks progress. So if the Brexit talks start to get difficult, it could lead to some trouble for the UK economy. Philip Hammond, on the other hand, he pressed for a transitional arrangement for UK businesses so that they would avoid a cliff edge scenario where once they leave the EU, they would no longer there wouldn't be any transitional arrangement where they would have something to fall back on. But the pound's reaction, the immediate reaction, was based on Mark Carney's comments on the rate outlook. So we're seeing the pound at hitting a 1 week low of 1.2667 against the US dollar. The Australian dollar didn't see much of a reaction to the RBA minutes. We saw the RBA still sounding very concerned about the high household debt levels in Australia, and combined with low wage growth, this is not a good sign for consumer spending. RBA now is unlikely to raise rates given that higher interest rates would push up mortgage costs, and that would increase the burden on households. On the other hand, cutting rates would also be dangerous because it would fuel further lending. So for now, it does appear that the RBA will be on hold for quite some time. But the Aussie, it had actually fallen yesterday because Moody's downgraded some of Australia's banks' credit ratings, but now it's attempting to recover some of those losses, currently trading at around 0.7614 against the US dollar. Let's have a quick look at oil now, because oil is struggling near 7-week lows. If you exclude that brief spike we had 7 weeks ago, it's actually oil prices are actually at 7 months lows. So the focus is on US inventory data this week, both the API numbers today and the official government data tomorrow, because we're seeing more and more signs of rising US output, also from Libya and Niger as well, more than offsetting OPEC's efforts to rebalance the market. We can see here in the chart, US crude is currently at around $44.30 a barrel. Looking at the economic calendar, it's looking very quiet for today. There is the dairy auction later today, which could impact the New Zealand dollar. We just had producer prices out of Germany, which were a bit weaker than expected, though that didn't have much of an impact. And also to watch out for is a speech by Dallas Fed President Robert Kaplan at 19 hours GMT. That's it from me. Thank you very much for watching, and have a great day.